What's going on, everybody? It's Stas here. Welcome back to another video. So the stock market did not have the best day today. S&P 500 and the Dow Jones went down 0.2%. The Nasdaq 100 pretty much broke even as the Russell 2000 got hit the worst, down over 1.8% on the day. And today we're going to be talking more about the stock market, breaking down some technicals, going over 10 stocks to buy right now as we're getting into 2021. And I also want to share with you guys what I did in the stock market today, stocks I own right now, and in general where my head is at as a trader and as an investor. So if you guys find value, make sure to hit the like button, subscribe to the channel. And by the way, we did it. We hit 20K. Thank you guys so much for the massive milestone. I'm honestly very proud of that, very happy, and it couldn't have happened without you guys. But the truth is, the work has just begun. We're going to get to 50K next, followed by 100K. So make sure to keep on watching these videos, guys, because I'm not going to stop making them. And also, make sure to join the Strive Smart Discord chat, the Strive Smart Facebook group, link down below. And you could also get 4 stocks from WeBull, which the clock is ticking. That runs out here in the next couple of days at the end of December. So make sure to get those 4 stocks, link down below. And all of those links down there are 100% free of charge. So let's get into it, guys. What happened today? Well, we were down for a lot of the day. S&P closed red, Dow closed red, the Nasdaq 100 pretty much broke even, but it was up 0.04%, nothing much, and the Russell got slammed, and despite us being red, I mean, take a look, the S&P 500 hit an all-time high, so I guess it wasn't that bad of a day. Really, it wasn't that bad of a day, but we still ended up going down. I mean, take a look what happened today. We gapped up, and that's pretty much all the green we saw for the day. We gapped up from 37.35 roughly where we closed yesterday. Actually, more like, 37.35. We gapped up to 37.56, hit that all-time high, and then we ended up pulling down for the rest of the day, again closing down 0.2%. And notice where the S&P 500 held. This is very, very good for the bulls. If I pull back a bit, you can see here on the 4-hour chart, probably even on the 90-day chart, you can see that we ended up holding, if I zoom in a bit, we held 37.26 as a support, which was that all-time high from back in the middle of December, back on the 17th of December to be exact. So the fact that we bursted out of 37.26 yesterday, hit an all-time high yesterday and today, and we pulled down and we held 37.26 as support, that is a very good sign that the bulls overall are still in control. And based on what I'm seeing on this time frame and on the hourly time frame and pretty much on every time frame, the bulls are still in control. So for tomorrow, for the rest of this week, look and see what the S&P 500 does at 37.25.26. If we break this level, we'll probably gap down to about 37.12, which is another big support. And if we break 37.12, right around that 50 SMA as well here on the hourly chart, we might be going down maybe to 3700, which is another level of support. And another thing worth noting is we might not break 37.26. In fact, we might rally off of it. And if we do, watch out for a move back towards 37.30, 37.35, heck, maybe even back to those all-time highs. So the moral of the story is 37.25.26 is a big level to watch for the rest of this week on the S&P 500. And when it comes down to the good old Dow Jones, we're looking bullish as well. We broke out of a channel that we've been in for this whole month of December with resistance at 30,250 and support at about 29,850, right? We were trading back and forth the past couple of weeks there. And yesterday we ended up picking direction. Finally, right? We broke out of 30,250, got to about 30,550, and today we hit another all-time high at almost 30,600, 30,588.79 to be exact. And after we hit that all-time high, we sold off. Very similar to what happened with the S&P 500. And notice we actually held an old resistance. The resistance from all of December, 30,250, 30,300, we held that level as a support. That's very, very good here for the bulls. Take a look here on the 5-day, 5-minute to see it even better. This is looking very good. And on the intraday chart, you can see it even better. We hit 30,250 right around that area, and we've been recovering, uptrending for the rest of the day, really for the second half of the day. Ever since we hit that 30,275 level, we rallied up. So that's good for the Dow. So for tomorrow, watch out and see what it does right around 30,300. Do we rally back up and maybe push 30,500 again, or do we end up selling off and getting ourselves back in that channel that the Dow was in for almost all of December 2020? So the next one here is the Nasdaq 100. Nasdaq 100, let's see, did this hit an all-time high? Probably. It probably did. It did. 30,000. We saw 30,000 plus all-time high on the Dow. S&P 500 all-time high, and the Nasdaq 100 also hit an all-time high at 12,925. So we hit that point, and we ended up pulling back down from there, and we're holding very strongly 12,800 as a support. We closed above that level, and on all time frames, pretty much, guys, there's no doubting it that the bulls are in full charge on the Nasdaq. So as long as we're over 12,750, this is bullish. I mean, we might, if we break 12,800, we might see a gap down to about 12,750, which was that old all-time high. That might be where we find support. But overall, this is looking, like I said, very, very bullish. And the Russell 2000 is finally starting to see a pullback. Here on the hourly chart, you guys can see it with today's little 2% drop. We're getting closer to that 180 SMA. So this could end up being a potential dip buy on the Russell, maybe heading into these next couple days, maybe next week. And one ETF that I actually own, which is really moving with the Russell, it tracks the Russell. I think it's IJR. Is it IJR? I'm pretty sure that's it. Yeah, IJR is iShares Trust Core S&P Small Cap ETF. This one's down about $3 from its peak, down about 2%, holding that 180 SMA, same as the Russell 2000 here on the hourly chart. So that could be one worth watching if you think that this index is going to bounce back. And I've said it before, I mean, I think the Russell has more downside to go, and I'm not sure it's going to happen, the downside that is, whether that's going to happen this week, next week, or maybe in a month or two. But overall, I think we need to pull down, whether it's from 1900 to 1800, whether we pop back up to 2000, 2100, then from there down to 1900. I don't know what's going to happen, but overall, this is looking pretty overextended, in my opinion at least, on the 4-hour chart. So let me know your thoughts down below in the comments. As always, I would love to know. And now let's talk about what I did today. And the funny thing is, guys, I didn't do anything today. Yesterday, I caught losses on Square, on Nvidia. I day traded NNDM yesterday, which was a very good play. And today, I just didn't do anything. I'm sitting on my cash. I'm being pretty patient. And that's kind of what I want to do here as we're wrapping up 2020. And mind you guys, there's literally 2-3 days left in 2020, and the market is closed on New Year's Day. So this week is short as well. And I don't want to just rush into a position quite yet. And I want to see if some of the ones we're going to talk about today are actually going to open up. In terms of stocks, that is. So I want to see if some of these, play out the way I want them to before I get in. And I didn't see much of that today, which is why I didn't take any new positions. And a lesson for you guys, and I'm sure you already know this, but a lesson I learned earlier on in my trading is, the truth is, I mean, over trading is kind of like the devil in a way. Over trading is not good. A lot of people think that, hey, the way to make money in the markets is go out there and just trade till your freaking hands fall off. Trade till your eyes bleed, right? Trade so much that you don't even know what trading is anymore. And the truth is, guys, I was that guy. I mean, I was day trading 15, 20 trades a day. I was placing so many trades. And the truth is, the more you realize it, or the more you learn and the more you're in the markets, you realize that you have to be precise and you have to kind of kind of just do more, focus more on quality than quantity, right? That's kind of what I'm getting at here. And I didn't see anything today, so I didn't want to force anything. And I'm just sitting on my cash, about 60% cash, whatever. And on top of that, I'm still in some swing trades, so I'm not all cash. I'm still in SLV. I'm still in Workhorse. Those are my two main holdings right now. And I have a good amount of cash on top of that, guys. So let me know your thoughts down below in the comments. And I'd love to ask you guys a question. And I'm not sure if you guys want to answer this, but if you do, go ahead, drop a comment down below. What is one of the biggest lessons you have learned in the stock market? For me personally, again, one of the biggest ones I've learned, and there's so many, but one of the biggest ones is don't overtrade, don't overcomplicate it, don't overthink it. Those kind of all go in line. So again, let me know in the comments your biggest lesson. And now let's talk about a bunch of stocks. I have 10, maybe 11, 12 here we'll talk about in today's video, starting off with good old Alibaba. And guys, Alibaba, we saw a massive sell-off the other day. It was down over 15% in a single day. It gapped down from 245 down to about 210 at its lowest, maybe even under that. And it started recovering at about 220. And we talked about 220 being a pretty interesting level, as that was support, or actually resistance, from back in April all the way through June of 2020. So that was a level to watch out for. And we all kind of agreed, I was saying this, I'm sure many of you guys agreed with it, that sell-off we saw with Alibaba was a bit overblown, very overblown in my opinion, and it was bound for a relief rally. And I actually bought shares, not in my trading account, but in my long-term account. I bought shares, I believe at 228, if I'm not mistaken. I picked up some shares there. And those are obviously in the profit now as we're trading at 236, but those are long-term shares. And overall, I think this is a pretty good opportunity. And I've been saying that before on the channel, right? We held 220. Now we're trading close to 245, which is that resistance that's coming up. But honestly, we still have some juice from 235 to 245, right? There still is about $10 left for us, for us to actually fill the gap. So watch out for that. I think Alibaba could end up going maybe to that 50 SMA here on the 4-hour, right around 250. That could be in the short term where it goes. And even if it breaks 250, right around that 50 SMA, I could see it go much higher, maybe 260, maybe 265. So I'm watching Baba here closely on this nice recovery relief rally that we are seeing, as at one point it got down over 30% from its peak back in the end of October. So that's interesting. Another one here I'm watching, which got a price increase today from Goldman Sachs, is Snapchat, ticker symbol SNAP. They actually, Goldman Sachs that is, they raised their price target from $47. Get this, guys. Not from 47 to 50 to 55, not from 47 to 60. No. They raised it from $47 to $77, guys. That's a pretty big increase. Coming from an analyst, right? Usually they don't increase it that much, but yeah, I guess Goldman Sachs is pretty dang bullish on Snapchat, and they raised it up a ton. And as we saw that come out, that catalyst this morning, well, we got a big price hike in the stock. The stock went up almost $3 today, up over 6%. We pretty much solidified this 180 SMA 4-hour chart as support. If I extend this to the right, you guys can see that. Very nice bounce off today from that level. And if I zoom in a bit here, maybe on the 10-day chart, you guys can see we're trying at this point. We're not fully there yet, but we're trying to break out of this overall downtrend we've been in for the past couple of trading days, right? Ever since the middle of December, right around 54. We've been making lower highs from there, 54, 54.20, 53.60, and today we hit 53.30 earlier in the day, and we failed breaking out of there. So that is worth watching. Snapchat, you guys can see, at one point it was up way more than 6%. It had to have been up close to 10%, 10% plus, and we got rejected there. So this 10-day, 30-minute chart is huge for direction in my opinion, on Snapchat. And if that breaks, 52, 53, this could be off to the races. And even here at this point, we could get a nice play for maybe even $51 where it's currently trading at, maybe up to $53, maybe up to $54. So Snapchat is worth watching. Another one here is Facebook, ticker symbol FB. This one has been in a wedge on the 4-hour chart. We've been talking about this for weeks, it seems like. It hasn't been doing much. I've traded Facebook in the past couple weeks a couple times, but nothing too crazy. And I think the big move is coming once we break out of, I'd say, 280 to 285. That's right where this wedge is, and you guys can see the resistance of the wedge. And you guys can see we're approaching it. We hit about 280, I think, earlier today. Let me double check. Yeah, we hit 280 today. We failed breaking out of there. But I think if we get out of 280, 285, there could be momentum back into the 300s here on Facebook, which honestly, guys, Facebook hasn't done much ever since summertime. And summertime here, where I'm at, I don't know where you guys are at. I know in Australia, summer's different, but summertime here is in August, right? And Facebook hasn't done much since August, so I'm waiting to see if it does break out of there. And Amazon's another one that has broken out of the wedge, right? This is kind of what I'm waiting for when it comes to Facebook. We got the breakout here on Amazon out of the resistance of this wedge at about 3,200. We were waiting for that. We've been calling that out, and it's been going bananas ever since then. It's gone from 3,200. Now it's over 3,300, and honestly, I think there's more upside. We're seeing a big resistance coming up at about 3,350, 3,375. If that's able to break, 3,500 is next. Bring it on. I think that's where we're heading, which could be another 4 or 5% upside from where we are right now. So watch Amazon, big tech in general, guys, but especially Amazon and Facebook again, as Facebook is a little bit before in terms of the pattern that we're seeing in Amazon. The breakout, Facebook is a little bit before that. It's right before the breakout, but I think it's coming, right? So Facebook, Amazon, very much worth watching here. FedEx is another one, guys, that I've been getting a lot of questions on, and we've been talking about the head and shoulder here on FedEx. We called it out a little bit ago. You guys can see it did end up panning out. I think this was like a week ago we covered this stock after they reported earnings. Take a look here. We had the left shoulder, the right shoulder, and the head, and we said watch out for this right shoulder. If we break 280, 285, which looking back in hindsight we did, and I said that back then last week. I said if we break 280, that's going to be the completion of the right shoulder. And I didn't think we were going to get down at 260 that quick, but we did. And at this point, the head and shoulder is done. It's completed. And we're looking at 260 now as a support for a very beaten down stock. Honestly, this stock has gone down $40 in the past 10 trading days, maybe a little bit more. That's 14%, a 14%, almost 15% drop. And we haven't seen really any rallies during that drop. So I think here where we are now, this 260 level, this support, this could very well be where we do see a nice rally in FedEx, maybe back up to 280, maybe 275, 280, 285. So watch out for FedEx here. And another thing worth noting, the second it breaks 260, if it does, on the bottom side, that's not going to be too good. We might see a little bit more downside if that happens, maybe a couple more percentage points. But by the looks of it, it's trying to hold 260. And honestly, we just have to wait for more data to come in, more days of trading to see what happens here at 260. So let me know your thoughts at any point in this video, guys. If you have questions, thoughts, let me know your thoughts down below in the comments. And don't forget to hit the like button. Let's try to get 400 likes. That's kind of been the like milestone here for the daily videos, 400. So let's try and get 400 every day. Hit the like button. Make sure to subscribe to the channel. We're not done yet. Just because we hit 20K, we're not done. We're getting to 50K, 100K. Those are the next milestones. And let's get into another stock here, RMG, which is, you guessed it, another SPAC, right? This one's down today 15%. And overall, from its peak, it's down much more than that. It's down from $39 to about 27, which is over a 30% drop, more like 35% to be exact. And RMG, what you guys see here, technically speaking, is we're right around that 50 SMA, right around that 50 SMA 4-hour chart, which has been support in the past couple of weeks. And it's no denying it. It was very overbought, very overheated at $40, and this pull down was much needed. I'm very happy about it. And one thing worth mentioning again, if we hold 25, 26, 27, 50 SMA 4-hour chart, this could be the dip buy that we're waiting for. And if you guys don't know, this is Romeo Power Technology, right? This is this SPAC here, and they actually make and design, manufacture lithium-ion batteries and modules and packs for commercial electric vehicles. So there's definitely some hype behind this one, definitely some hype, and I don't think the hype's done. This might continue to heat up a bit off of this 50 SMA, so watch out for it. And another one, which is yet again another SPAC, is Open, and this merger officially went through last week, and we saw another big sell-off earlier today. What a volatile day it was for Open Door today. It went down to $22, so it was down at 1.10% at the market open, and it ended up recovering from $22 all the way back up to $25. So it went down 10% at first, and then it went from its bottom point of the day to where it closed up 12%. So a very volatile day for Open Door. But what it tells me is, hey, this 180 SMA was respected. It was treated as a buying point, and it held. You guys can see it. It clearly held $22, right around that old resistance from back in the end of November, and the 180 SMA on the 4-hour chart. So this is very worth watching. I don't think the rally is over. I think we could get back to $30 plus here on Open Door, and I think especially if we break $26, $26.75 to be exact, that resistance from back in the middle of October. I think if we're able to rally out of there, oh man, the sky is the limit on this one. Back over 30 in a heartbeat, in my personal opinion. And you guys, of course, like always, must do your own research. That is just my opinion, right? And another one here is GameStop, guys. Talk about GameStop. This one has been crazy. They reported earnings a couple weeks ago. The company did not have the best earnings. The stock tanked from 17, 18 bucks down to about 12. A lot of people bought it up from there. Obviously, in hindsight, we see that it held that $12, $13 level of support, rallied back over $15, and it had an amazing squeeze up to over 20 bucks, $23 to be more specific, and now we're selling back off. We're down about 7% today, and I think there could be a little bit more downside, honestly. This is starting to look attractive. The pullback is starting to look nice, but it's still a falling knife, and I think there could be some more money to be made for the bears, meaning it might go down lower, right? We might be going down $17, maybe $18, right around this 50 SMA on the 4-hour chart. And another thing worth noting is they have a big short float, or a big percentage of their shares are being sold short, right? And that means at any point in time, we can see a ridiculous short squeeze like we saw here, right? This was a big short squeeze on GameStop. I mean, take a look. It went from 16 bucks all the way up to $20 in a day. I mean, that is a short squeeze. That's beautiful right there. 20% day on that day when it went from 16 to over 20 bucks. So that could easily happen again. I mean, with a stock, again, that has a lot of shares outstanding short, I mean, this could squeeze up like crazy if we get down to 17. Who's to say we can't squeeze over 20 in a single day? I mean, it's very possible in my opinion. So we're watching GameStop for that exact reason. And Beyond Meat is another one, BYND. This one got rejected, guys, at about 145 bucks. That's where we've seen a lot of struggle in the past. That's a big resistance stemming back from earlier 2020, back in May, also back in July, back in August, and now recently since the end of November, we've been struggling at 145, and we just got rejected. We got rejected at 145. We failed holding 138, and in fact, we got all the way down to 125, which it seems like it's trying to hold now, which is another big support that we held from back in the summer, July, August, and we rallied from 125 to over 190 at that point in time. So this is interesting, right? I think if 125 can hold, and mind you guys, this is not by any means the most attractive looking pattern, but I think if 125 can hold here on Beyond Meat, we might be able to get a relief rally, maybe back up to, or 125 held, we might be able to get a relief rally back up to maybe 135, 137. This gap might be able to fill. But another thing worth noting is if 125 breaks, oh man, we might be going down lower. We could end up squeezing down to maybe 108, maybe 110, maybe right around this next gap on the downside to 105. I don't think it's going to get all the way to 105, but we could get maybe 115, 120, who knows? All I know is that if 125 breaks on the downside, that's not the best sign. So watch out for Beyond Meat. This could honestly be in the short term, a long play and a short play. We'll see. And Corsair is another one, CRSR, that I've been tracking pretty closely these past couple of weeks, and now we're dipping down again. Today we were down 8.83%. We're right around this 180 SMA on the 4-hour chart. If I redraw this, it seems like we are holding the uptrend as of now, which is good, right? We're at a higher low at this point, and we are seeing resistance at 42. So this is pretty interesting, right? Resistance at 42. We're holding 35 uptrend. Maybe we see a nice pop off 35 back into the low 40s, high 30s. I think that's possible. I think we will be able to fill the gap here on Corsair, which from where we are now, $35 up to 42, 43, that's about a 16% upside. So Corsair is very worth watching at this point right here. And another thing worth watching, another stock that is Square, ticker symbol SQ. Guys, this stock has gotten crushed these past couple of days, and rightfully so. It was very overbought. And if you guys remember, I got in at 233 a couple of days ago. Cut the loss yesterday, thankfully. And this is why you guys have to cut losses, right? Because this could happen. This could happen to you. It's clearly down over $20, around $20 from where I got in originally. And if you're not managing your risk, cutting your losses, the truth is your money could be caught in a trade a little bit more than you intended it to. And that means it's opportunity cost. That means the money you have tied up in this trade, which is losing you money now, you can't use it for different trades that could be making you money, right? So you guys have to realize the opportunity cost here of the money that you're using to trade with. So I was able to get out of Square. Now I can use that free cash to get into something else. Maybe back into Square, honestly, because now we're actually getting to a level that we talked about. We talked about two levels last week on Square. One being around 230. It did not hold that level. And the second one being around 205, 210, right around this 180 SMA where we are trading right now. So this could be a dip buy here on Square, very well could be. And based on this intraday chart, you guys can see it's holding 208, 210 very nicely. We hit that level. We rallied for the rest of the day off that level, and we closed at 214. So I think Square is very much worth watching here. And same with NEO, guys. NEO went up over 4.5% today. Strong day as the markets in general were red. And notice what happened. If I zoom in a bit here on the 20-day chart, notice how we actually held a higher low on NEO today. This is very good. We held $42, $43 at a higher low based on this uptrend, and the previous low was at about $39.50, $40. So this is very good stuff for NEO, and I would like to see it now maybe squeeze up to the higher 40s, back to 48, maybe over 48 to $50. I think that's where it's heading. And mind you guys, in the next 10 days, we do have NEO Day coming up on January 9th, so there could be some hype, excitement heading into that, which could also push the stock price up. So watch out for that. And that's pretty much it for this video. And Siri's talking to me randomly again. This is weird. But overall, guys, that's it for the video. If you enjoyed it, hit the like button. Let's try to get 400 likes. Subscribe to the channel. Make sure to do that. And also, don't forget to join the Strive Smart Discord chat, the Facebook group, and claim your 4 stocks from WeBull. All of those are linked down below, and they're 100% free of charge to be involved with, to be a part of. And again, those stocks are free. All you have to do is deposit $100. You get your 4 4 stocks. And if you want to take that $100 back, you're free to do so, and you keep the 4 stocks. So I'll catch you all in the next video. Thanks for watching. As always, love you guys. Your support is fantastic. Thanks as always. Keep crushing the market. Stay safe out there. Peace out.